Paul, great to have you with us. So a big period for earnings last week. They continue this week, and it feels as though the overall theme, the pattern is beat and raise, especially from the cyclical parts of the market, cyclical companies. Yet the majority of companies highlighting plenty of inflationary pressures and supply chain issues. So what do you do with these earnings? They're coming in really strong, yet companies sound a little bit cautious when it comes to the outlook.
Yes, good morning. That's absolutely right. In fact, what we've seen is revenues impressing a little bit more than earnings, which is not a surprise really, given the fact that there seems to be quite a lot of supply chain cost pressure coming through. I think as we go through the rest of the year, I think the market will look to see whether or not we start to see some capacity come back on stream, return to work. Clearly will mean that the labour cost pressures will start potentially to fall a little bit, and that may be a little bit more positive for the earnings outlook. But at this stage, it feels like the top line is impressing rather more than the bottom line.
The banks are in focus today. We had HSBC earnings overnight, also reaction to the European stress tests on Friday. And a lot of the focus is on the potential for shareholder payouts, dividends, and share buybacks. How do you feel about the banking sector? And is there a play in Europe versus UK banks? How are you thinking about the sector?
It's certainly been a very poor sector for a long period of time, and we all know the reasons why that's been: regulatory uncertainty, capital requirements. And in fact, what's added to the problem for the banks over the last few years in Europe has been an overhang of loan supply against demand, because the European end markets have not really been that keen to borrow. I think as we go forward, it may be that starts to change a little bit. We started to see a little bit of consolidation within the sector. The UK banks do feel as if they're slightly better positioned in some ways, and that feels because the market is a little bit more orderly. It's a bit more of a concentrated banking market, which means there's probably a little bit more pricing power than there is in Europe, although there isn't really any pricing power in either of them. But on top of that, I think that buybacks versus dividends is an interesting debate. I think for those companies trading below book value, we'd rather see buybacks rather than dividends because they're highly accretive. And that feels like something which is probably more likely to happen here in the UK than in continental Europe. So I think we'd be broadly positive in the near term in the area for both the UK and for Europe, but I think with a preference at this stage for the UK.